go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Kospi continues to outperform, is now heading towards its highest level in over 3 years.
We will then implement the framework that we have worked hard over these last 2 days.
From the December lows, it's made up close to around 50% of the losses that we saw earlier.
Maruti Suzuki clearly feeling the heat as a result of China's export curbs on rare earth magnet.
Right now, about 18 points lower on the Nifty.
Seeing a lot of projects coming up in Kuwait, also in Qatar.
And the United States wants access for these agricultural sectors. The government is holding almost daily meetings when it comes to the rare earth magnet issue.
It's been a steady, slow rise for the market.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Rima, with me are Surbi and Nigel. Well, it looked a lot better, right? Sometime in the day. We've given up on our gains. We're holding on to the green line for the Nifty and the Sensex, but just by a smidge, up 35 points in the Nifty, Sensex up 120 points. And look at the way the mid-cap index has come under pressure. The mid-cap index is down close to about 400 points. So, and Nifty Bank underperforming yet again.
You know, there is something slightly uncanny about the way mid-caps are cooling off, but maybe we shouldn't complain. I mean, they've had a great ride, a great bounce back. And yes, it's a day of cool off. And the reason we're taking note is look at the pockets where the cool off is happening. Capital market plays, defense stocks. It started with the Alcobev stocks in the morning, but that's where there's fundamental reason for those stocks to sell off. But then it's spread to other parts of the mid-cap market. It's still not too bad. I mean, just about a 0.6% drop. But yes, I think India is underperforming global markets today, so have to take note of that.
I think it's about a 20% up move for the small cap index from our April lows.
Yeah. It'll be more than that.
I think it's when I last checked, it was about 20%. So keeping that in context.
Yeah, it's par for the course. Yeah. I mean, I think so. It's par for the course. And still, if you look at the breadth of the market, it's 1:1. After seeing that kind of a run, I think you'll take that. And the point today is bad news is getting punished. BSE, the stock is down 5%. It's had a big run, some money being taken off the table. The alcohol beverage, companies like United Spirits, maybe, some pocket of the market will argue that demand is inelastic, but United Spirits is still down. One would have thought after a 5% downtick in the initial part of trade, the stock will recover. But it's not really recovered in today's trading session. It's still down close to around 7%. And the others as well, even Radhiko Khaitan, I think it has a single-digit contribution coming in from Maharashtra, but still that stock is down close to around 4.5% or thereabouts. However, a few stocks are doing well. This morning we highlighted CRISIL. There was delivery-based buying being seen on that counter. The volumes are very, very high today. And the stock is taking off crucial technical levels as well. So that's the reason why, in fact, that has moved up. The delivery that we saw yesterday was much higher than the averages. Today's volume is even higher than that. And I think that 5,850 odd mark is the crucial level. Normally, we don't talk about the stock whose volumes are low, but today the volumes are unusually high on that particular name as well. Well, let's get across to Mitesh, who's joining in to help us out with how would he trade the Nifty. Mitesh, very volatile last 90 minutes. The Nifty from being higher had come sharply lower, and then in fact that dip has got bought into. What's your take in terms of the Nifty? Where do you go from here? And the Nifty Bank has a couple of days of cooling off. You think more to go? Does it want to go ahead and retest its 20 DMA?
Definitely. So I think the only worry in this entire thing is that those that break out about 25,050 zones, the follow-through has not been very strong or very convincing. Typically, this could be a sign of momentum being slightly lost at high levels, and therefore, I think, while we don't have a signal of reversal as yet, I think it will be very prudent to trail your stop loss slightly on the tighter side, and I would recommend a spot level of 25,080 as the new trailing stop loss for long positions. As I said, I think there's no sign of reversal on the Nifty. Similarly, on the Bank Nifty, also after a good rally is still just giving a pullback. So I'm not sure whether starting a negative trend. But as long as it's above 56,100, we'll maintain a positive stance. Though I think looking at the way the market is shaping up, not very keen to go aggressively long on individual stocks. But on the index, just tighten the stop losses slightly closer to the current levels.
The high today was 25,222. So from that level, the Nifty has given up close to about 80 points. IT is doing well yet again. HCL Tech, Infosys, Wipro, Tech Mahindra. The top 4 Nifty gainers today are the large cap IT names, and these stocks have moved up anywhere between 4 to 5% so far this week and at the day's high. So for at least some of them, like HCL Tech. So IT is one pocket, and the other one is Reliance Industries. Again, it's come off from the day's high, but it's still trying to bat for the bulls. Reliance Industries 1450 with a gain of close to about 0.8%. Mitesh, yesterday you were long on many of these large cap IT names. I remember HCL Tech, Tech Mahindra. Are you continuing to hold them? Considering that we've seen another leg of up move in IT names, what are the charts telling you? And throw in a word on Reliance Industries too.
So one, IT still remains the app, which is showing strength. We've just booked some profits in TCS, but otherwise it is still a sector and set of stocks which is on the positive side. So maintain long bias on IT. On Reliance, I think, again, under stock, which I've just booked out purely because of the fact that it's not sustaining about this 1465, 1470 levels. Though I like the overall structure, I think a momentum will come in once we see this 1470 levels being taken out decisively, and then we can look at targets of 1530 plus. So structure is positive, but given the fact that the market is showing lack of follow through, we're slightly cautious and we've reduced our positions.
Okay. All right. Got that. Just, Mitesh, before we let you go, very quickly, I want to do a level check with you on IEX. IEX is down over 7% this afternoon. Yes, there is a broader mid-cap sell-off underway. But the additional news that's taking IEX down today is that this whole talk of market coupling is back. Look at the way the stock, sold off. We'll get our colleagues from Delhi on the story in just a bit, because there were some statements made today in Delhi by, I think, the minister himself, about how whenever market coupling happens, it'll be a wide bidding process or whatever. Market coupling basically means that you have the same price of electricity across any exchanges. So the fear was whether it's going to break IEX's monopoly. And that fear is back and the stock is reacting. Just Mitesh, quickly, it's a news-based move, but levels to keep in mind here?
See, IEX, had a very good rally, and I think today's first sign of strong selling coming in. It's just taken support at the 190 or pivot. The intraday low is slightly lesser than that, 188.5. But I think as long as on a closing basis, it's above 190, there could be one more bounce back to about levels of 200, where I would suggest people get profit. Or if it breaks today's low, I think exit the positions. I think if the stock is now showing signs of this rally, which started from 155 odd levels, has completed, and therefore I think could go into a consolidation either or a correction if it breaks 188.5.
Got that. Let's talk about some of these capital market plays, particularly Bombay Stock Exchange, which is under pressure after the options premium turnover has fallen, and it's fallen sharply over the last 5 days compared to the averages of, say, April or May. Vamakshi is here with the numbers and the analysis.
Well, Rima, when we look at BSE, the stock overall had done very well over the last couple of sessions. In fact, it was up for 9 consecutive sessions and had recovered almost 130% from the lows in March. But today, the stock is taking a bit of a breather, and that is because, the option premium turnover, especially if we take the average, has seen a bit of a dip. Now, when we look at the data that is currently flashing on your screen, keep in mind that 10th June, which is Tuesday, is actually the weekly expiry, and resultantly the volumes there are, higher than the other days. But, average option premium turnover in the last 5 days stood at 10,824 crores. Now, when we compare it to the average turnover in May as well as April, this is significantly lower, because on an average, BSE registered turnover of almost 15,500 odd crores that time around. But, when we particularly focus on the last 5 expiries, that data will also come up for you on the screens. 10th June, the expiry option premium turnover fell to 20,749. This is almost a 50% drop if we compare it to the average in the last 4 expiries. Overall, when you look at the company's market share as well, this is for the index options that, keep in mind that too has seen a bit of a dip. Keep in mind that BSE's market share had already improved from 16.4% to 23.6% in the month of April. But, given the kind of drop we're seeing in the volumes, the market share too has now slipped by 70 basis points if we compare it to the average that we saw in May. Apart from that, today there is also an announcement that came through. BSE has been added to the stage 1 of additional surveillance measures, that is the ASM framework, and the trading on the stock will now attract 100% margin. So today as well, the stock is trading lower on the back of these developments.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's get in Prakash Diwan on the show. Prakash, BSE was defying gravity. Now, in fact, the volumes have fallen a little bit. And that ASM as well has put a bit of a lid out there. But we have seen this in the past. BSE has been the stock you want to buy on the dip. But this time around, is it different? Has it gone too far in terms of valuations to justify these sort of valuations that it's trading at?
Good afternoon, Nigel. So you're right. The valuations were a stretch. Market always loves an excuse to kind of book profits. And, this whole thing about options, volumes coming down, very progressively, and suddenly this drastic, this thing from the 3rd to the 10th of June is primarily, my sense is primarily driven by a lot of the hedge funds getting investigated for, whatever misdoings were reported or, were heard of in that space. So if that were the case, I'm sure they've pulled back from the market for at least this week. Now, if they were to come back after a couple of weeks, things could start looking up, and the stock will also kind of absorb that reaction positively. But what we need to look at is this is a secular long-term story, whether it's the BSE, whether it's any of the depositories, whether it's any of the registrars and transfer agents. You will have to latch on to this from a slightly longer-term perspective. So yes, BSE makes sense to buy a dips. It's a great franchise. You can't replace it. Even if the NSE were to be around, they both parallelly will kind of continue to grow at their own respective pace. So I think you will have takers for the BSE, but at lower levels. And you could probably wait for some consolidation to happen in the stock. So there'll be a churn. Change of hands as we all see whenever a stock rises meteorically, and once that is done, you'll probably see a new base being formed and a growth from there on. So I would believe that's likely to happen more than not.
Okay, let's get back to the other big story, Prakash, IEX. And before that, for our viewers, let's just get the news. This is an exclusive. Government sources say that the Power Minister Manohar Lal is planning to conduct stakeholder consultation on market coupling. We've heard this news before. Stock has fallen, it's recovered. But once again, on this news, it's down nearly 7%. Abhimanyu joins in with the details. Abhimanyu.
Well, what we have learned from sources is that Power Minister Manohar Lal is going to meet stakeholders over the issue of market coupling and is going to apprise stakeholders about the benefits of market coupling. Also, sources have indicated that whenever market coupling takes place, it will take through a broad bid and not an internal bid. Now, market coupling by definition means aggregation and match of buy and sell bids by power exchanges for a uniform price discovery. And if at all, market coupling, when it takes place, it will imply a single price for electricity to be traded at any point through the power exchanges. Now, it has been some time since market coupling has been indicated that the policy would come out in the public domain, but there hasn't been any activity on that front. There have been indications which have been given since the past few years by several ministers, even in the previous government, that is from 2019 to 2024. The then Power Minister R.K. Singh had indicated that market coupling will eventually take place, but had refused to ascribe any timeline to that. Also, on the 21st of February, the Power Secretary had indicated that the Ministry and the CERC were reviewing the Grid Controller of India's report on market coupling. And a government official last year in September 2024 had also told CNBC-TV18 that market coupling is on the cards, but had refused to ascribe any timeline to that. And now, with the fresh set of inputs, of course, it remains to be seen how early this meeting would take place, what kind of suggestions would be given by stakeholders, and what action would further be taken by the minister.
Prakash, IEX, once again, the stock is under pressure on the back of this market coupling fear.
No, I do agree. A couple of days back, it was flying because the MCX tie-up happened, and MCX was likely to take the price, this thing from IEX, inputs from IEX, and everybody thought that was a great occasion to celebrate, and the stock, actually reflected that. I just want to take ourselves back to the moment where the stock has lost a lot of ground because of this fear of market coupling coming in. And throughout the last 1 year, it's been regaining ground more because of the organic growth that's likely, right? I don't think market coupling is something that needs to be made into a bugbear the way it is right now. In fact, price discovery will have to be as broad-based as possible, and you can't rely on the whims and fancy or mechanisms of only one institution. So eventually, once that happens and gets digested, it will lead to a much healthier market in terms of volumes, which is good for IEX, right? So they should focus more on what brings them volumes, more customers, more depth, rather than be worried about, some sort of a monopolistic, or if not monopolistic, some sort of an advantageous position that they can keep expecting to leverage forever. So they'll have to live with that reality. And if you look at that possibility, I don't think there is any reason to panic. The stock will probably, bounce back at some point in time after this initial gush of selling liquidity gets absorbed.
All right, Prakash, besides these exchanges, I wanted to ask you about DCX. That's a stock that you liked. The stock is down close to around 5% today, but it appears there was a large trade that was pending that got cleaned out, because it's close to around 100 crore of large trade that's got cleaned out. What's your view on this name? And if you're aware if there was any kind of overhang on this name?
So, Nigel, I think, of course, it's, the huge volume that you are referring to is probably the reason why the stock, couldn't kind of hold its ground in terms of where it started off from. But let's face it, this rise post Operation Sindoor for most defense stocks has also benefited this particular name. It moved up very rapidly. The results came in. There has been a bit of a disappointment in results. If you listen to the con call very clearly, people have been asking questions why the company with 1,400 crores of revenue is just talking about a 5% margin, whereas, it's into such a lot of high entry barrier kind of businesses. But then, and the management probably is constrained to clarify given the confidentiality of the business, of the nature of its operations. So I think the market probably will have to wait for the numbers to happen. And that could, and remember, this is a lumpy business. Most of the earnings actually come in the last 2 quarters of the financial year. So this Q4 is gone. You'll have to wait for Q3 and Q4 FY26. If there is any indication of revenue and margin improvement there, then probably, the stock will continue getting re-rated. But, this exit, the beauty is that the exit has got absorbed as well. So there are takers at this level, believe in the story. But it will take some time because the numbers do not corroborate the hope and promise that the commentary has built up over the last many quarters.
So tread with caution. That's DCX Systems. Got that point. The other set of stocks where there's a lot of selling, Prakash, this afternoon. Alcobev, this whole excise hike in Maharashtra, that's really knocking them out, right? We're seeing United Spirits still down about almost 6%, Allied Blenders, Radico, all these stocks are down. Now, there'll be some offset because they'll be able to import cheaper, bulk scotch from the UK FTA. But nonetheless, there's this, excise hike coming through. I mean, what's your sense? Are the stocks still, worthy of being bought in such a dip? Or do you think this could become a bit of a longer lasting overhang?
So, few first order effects. So, people will come down to Goa to drink and carry back whatever they can. The second thing is you'll probably have, wine and beer probably remains unaffected. So, there are pockets which will probably continue to do well. The third thing is after the UK FTA, there was really no shakeout of sorts a reset. Let me not call it a shakeout, but a reset in the price mechanisms and the supply chain, the way they are structured, because it's going to take a while for the FTA impact to get executed. Now, once that were to happen, you'll probably end up having a lot of these companies either importing bulk scotch and, bringing down the price point for themselves and continuing to enjoy the margins while, MRPs have already shot up so much. In some cases, it's going to be 40-50%. So that's quite steep. But then, this is one sector which is slightly agnostic on the premium side in terms of demand. So we've seen that even in the past, just because it's happened after so many years, almost 13 years, that it looks very lumpy. So it will probably get absorbed in other ways. But my sense is the overhang won't last for too long. And there will be some mechanism where, as you rightly said, it will be offset with some sort of margin increase somewhere, relief somewhere. But the stocks that you need to look at are the ones that will also benefit from export potential. And again, United Spirits come to mind. And that's exactly the reason why it remains so resilient in spite of so much of news flow in the last 1 year, 2 years that you've seen around the liquor industry. I think USL or Diageo actually remains a very, very strong player. and they will continue to grow from here on in different ways, which Radico probably cannot, or Allied might take some time to match up to. So that's the picking order in that sense. You will be safer with the United Spirits, irrespective of what happens to the sector in one state.
Any view?
Now, Prakash, you know, right, what our request is going to be. We know you are from Goa, and time to time you come to Bombay. So you know where this is going. Since you prefaced your answer by talking about the interest in Goa now. But yeah, go on, Nigel.
No, I mean, Surbhi is speaking for herself, Prakash.
Yeah, because he's the premium consumer. For him, it doesn't matter. Like you were saying, Prakash was saying, right? Premium consumption is pretty inelastic to all these small price increases. So.
All right, let's move on from alcohol then. Prakash, I wanted to ask you about rating agency CRISIL. It had corrected to around 4,000 rupees, when the markets were a little bit of a tizzy. And today the volumes are very, very large. And earlier this morning we had pointed out that delivery-based volume as well was very, very large. As we speak, CRISIL is up closer around 7-8%. Any view on this name or from the rating agencies? Do you like any of them?
Oh, they're lovely businesses, Nigel. So, and especially in a situation where interest rates have started coming down, we're probably going towards the end of the fundraising winter of sorts. And this is discretionary fundraisers by businesses, by corporates, and a lot of PSUs for that matter, which will continue to kind of expand their balance sheets now that the interest rates have come within a very reasonable band. And, when you're in the middle of the interest rate softening cycle, this is exactly what happens. And all this issuance and the way the bond market is being sought to be deepened, I wouldn't be surprised if, it becomes a very significant play in the next 24 months from where it is today. The delta is quite, there are lots of things you can talk about around that. In fact, you can do a special show on how the bond market is likely to be a big element of asset allocation for even retail investors and HNIs and all the institutions, of course. But that activity levels is something which could probably come to the favorable listing of all the rating agencies. But CRISIL is likely to benefit more because of the nature of issuance of paper, which is going to happen. Is always CRISIL is favored as a rating agency by larger corporates, by PSUs. And that's where the benefit will be front-ended. So I think that's the story. But why it would do 7-8% today, of course, escapes my logic. But there must be a reason for it to kind of be so bullish about the business itself. And I've been positive on the business for the last month and a half, and we've been seeing a lot of buying happen or come back into these names, which otherwise have been languishing for quite some time.
Some big movers today. Walk-Hard stands out on the mid-cap end, 17% up on Walk-Hard. Pretty large volumes. It's a fresh 52-week high on Walk-Hard, 1,800 plus. VIP is another stock. This is a stock which is about 30% away from its 52-week high, but it's spiked up close to about 10%. And again, the volumes are fairly large.
And there's a downgrade on this one. There's a rating downgrade that's come on this one on a quantum of around 400 crores. And after that, the stock is up. So beat your imagination, weak numbers, rating downgrades. The street is expecting something, it appears.
Looks like, and Oil India, because we were talking about, reports. Here there's a brokerage note, not ratings downgrade, but a brokerage note. Avendus Spark is written on Oil India. They've initiated coverage with the buy. Target price is 630. That is about a 35% upside from the current price of 465. So Oil India is a stock liked by Avendus. Recent correction in commodity prices presents a favorable entry point, they say. Prakash, thank you very much for joining in and discussing, the last hour of trade with us. We'll slip into a break. As we do that, let's tell you how you can unlock a new dimension of business intelligence with CNBC-TV18 Access, our premium members-only experience on CNBC-TV18.com. From market-moving insights and thought leadership to exclusive access to marquee events, journalist interactions, studio tours, high-impact learning sessions. This is truly an elevated experience where members also enjoy curated lifestyle privileges and perks. The power of insight, the privilege of access, exclusivity, experiences, and influence. Yours to claim. Become a member. Log on to cnbctv18.com/access/plan. Welcome back. Let's talk about the markets, the way forward. Rahul Veera, fund manager of equity investments, Nippon India AIF, is now joining us on the show. Rahul, thank you very much for joining in. From the last time we spoke, markets have inched up. The RBI has front-loaded its liquid rate cuts and liquidity infusion, and plus US and China have agreed upon a framework. So all those trade talks and tensions, tariff, perhaps a little bit, has eased compared to before. How are you looking at the markets from here on? Because last time you were busy deploying your cash.
Yeah, you're absolutely correct. Just to add to all the catalysts that you mentioned, right? Also, the earnings cut that we saw in FY25, almost like 5 to 7% across the Nifty names, and across the NSE 500 names, it was closer to 15% to 20% in the small cap side. So that is largely behind. So in the Q4, if you see the earnings cut that has happened, that has hardly been 1 to 2%. So going forward, right, given the low base of Q1 plus FY26, the earnings expectation from the market is just 10 to 12%. We believe earnings cut is also largely behind. So this year will be largely a year of consolidation. And in terms of earnings visibility, macro stability, it's very clear that things will be positive from here on.
All right. Hi, Rahul. Good afternoon. Good to see you in. The last time around, you had cut your cash in the, that you were holding, I think, from early teens. You had brought it down to single digits. Now, I wanted to ask you about a couple of sectors, particularly the ones you are not very bullish on. Real estate, I don't think that's a sector that you like too much, right? Now, with this rate cuts, there is hopes that, EMIs become cheaper. It gets people more interested in housing. Have you changed that view, or would you want to stay away from real estate?
As of now, we prefer to be on the sidelines. We do not see much of the traction that is happening in terms of the volume pickup. So if you see the top 7 metro cities, the inventory levels on the higher end has started increasing. So some of the indications are there that probably the kind of numbers that the market is penning in terms of the pre-sales, I believe that next 1 or 2 years, it might not be as much as the market is expecting. There will be some disappointments there. So on the lower end of the curve, yes, like a 1 crore, 2 crore kind of a flat, some volume traction might come in because of the rate cuts. But broadly, the pre-sales will not match the FY23, FY24 numbers.
So you continue to remain, real estate is in a void for you all. And as you said in the past, I think cement is something that you liked. So we'll keep an eye out on that. But what about, the power sector? That is a theme you've been extremely bullish on. Let's narrow it down a little bit. If you want, you could share us some names as well in terms of what you'll hold in the fund. But how do you play this theme? Because, there'll be a lot of ways to play it. Please go ahead.
Sure. See, overall, across the power demand supply mismatch, the story is very well known. But what kind of plays you want to do? You don't want to direct power generators, or you want the transmission and distribution. So we prefer the transmission and distribution names. Multiple MNCs are out there, largely 3. And again, in terms of their specialization, right, they are going to be there over the kind of order book. More than 1 lakh crore is still expected to come through. We're largely bullish on that space, HVDC transmission lines. Now, what is happening in the sector is the kind of solar power and the grid connectivity, right? We recently saw how the disconnection happened in Spain with too much of emphasis on renewables. So all these kind of one-time impacts have to be reduced only with HVDC lines. So our expectation is the larger order books for some of these HVDC companies is going to become stronger. They're expensive, but they'll continue to remain expensive in the medium term.
What's the cash that you're holding? And incrementally, in the last 1 month, where have you deployed the money that you've got?
So incrementally, we have started deploying in some of the PVC pipe names. We believe the sector has broadly bottomed out. So if you see the past 10 years average for PVC resins, right, has been closer to 72. Broadly, now that has gone down because of the Chinese dumping that came down to 65, 66. In the past 1 month, there have been 3 price hikes that have happened. So once it was 1.5 rupees, the second time it was closer to 1 rupee. Again, last year, we saw the kind of volumes the management were expecting across the names didn't come through, largely because of the government capex. Now, this year, monsoon is going to be better, plus your government capex is going to be better. So volumes plus price, both these impacts will start throwing the numbers for the PVC segment now.
Do you want to name some names? Is it Astral, Phenolex? I mean, with the appropriate disclosure, or is it the entire sector which is going to do well from here on?
Our views across the sector, we like all the names.
You like all the names, okay. Anything else that you've put to work in terms of, further deployment, in terms of further buys?
So our view is even IT as a sector which we were a little bit underweight over the last 1 year. We are getting incrementally positive. So when we are doing a channel checks, we are meeting a lot of ground level people. We are seeing that the kind of pessimism that has been built in for the IT, probably that is not the case. The numbers will come through. It will be slightly better. So we are getting incrementally positive on the IT sector now.
Large cap, mid cap IT, what would the bias be?
So across our mid cap and small cap funds, we are preferring the mid cap, small cap names. That is a larger bias. But in the meantime, even for the larger names, the kind of pessimism is built in. We believe there is some kind of an opportunity in the large caps as well at this point of time.
Okay, all right, Rahul, I wanted to ask you about the biggest and the hottest theme in the last 45 days, defense. You didn't like that space, right? Did you all manage to finally get in? Or is that the place that, in fact, there is obviously a big runway and there's plenty of hope in terms of penetration, say, in the next 10 years, but valuations are too expensive for your liking?
Absolutely. The valuations are very, very uncomfortable for us to start kind of adding those names. But we have some pseudo defense names that we had in our portfolio that has helped us sail through this kind of an environment.
Okay, all right, Rahul, appreciate you joining in and filling us in with all of those details and all of the themes. But if you want to tell us, leave us with one comment on the headline index. Do you think it'll outbeat fixed returns by the end of this year, from year on, post the pullback we've seen?
Yes, I believe we'll have a positive outperformance against the other asset classes.
Okay, all right. So then you're optimistic that the Nifty trends even higher from here on. Got that, Rahul. Appreciate you joining in. And thanks a lot for giving us all those themes. Power, real estate, banks, and IT is something that Rahul likes. Well, on the flip side, the theme that he doesn't like too much is the real estate pack as well. Well, we have LIC. There's some continuity, I think, that's coming out there. Financial Services Bureau has recommended Mr. Doraiswamy as the MD and CEO of LIC. A bit of a perk up on that stock. It's still holding with a gain of close to around 2% or thereabouts.
Okay.
Okay, all right. I'll tell you what, we'll slip into a short break. We'll come back. We'll continue to focus on markets. We'll also address individual stocks that are moving around. Welcome back. Well, markets continue to hold with gains of around 40 to around 45 points. So let's see how it goes from here on. But let's get in Mitesh Thakkar. Mitesh, you've got a fresh couple of picks for us?
Yeah. So I have BTST calls on PI Industry. I think that's a stock, which is near the day's high. So we will take BTST with the stock just below levels of 39.60 for targets of around 4,000. The other one which I liked is Biocon, which can be taken as a BTST with the stock below 351 for targets of 359.
Okay, all right, got that. Mitesh, thanks very much for all your advice through the day today. You have a good afternoon, and we'll connect again tomorrow. By the way, those are announcements coming in from the cabinet meeting. Okay, a railway project getting approved in Bellary, Chikjajur, if I got the pronunciations correct. It's a large one, 3,300 crores of a project getting approved. We know the railway stocks have been very excited. Not quite sure if it's going to impact any of the listed players or not, but those are some initial announcements that are coming in from the cabinet meeting. As we wait by and get more of those details, let's go back and revisit the big story, the reason why Alco-Bev stocks are not quite feeling the high this afternoon. Most of them, look at the cuts, still between 4% to 6.5% down on most of them. That's because Maharashtra has decided to sharply increase the excise duty on spirits. Manglam's here. Manglam, break it down for us.
Well, the first time there has been an increase in excise duty in Maharashtra all the way back since 2011, the biggest one that we've seen. And that's definitely not gone down well with the names like United Spirits, Radico Khaitan and Allied Blenders. Why is that? Because remember, recently they were hoping for some sort of improvement in their costing, and that's largely because of the UK-India free trade agreement. But that's not the case because the state's taken away what the centre had given them. Maharashtra has gone ahead and increased duty on IMFL, Indian-made foreign liquor, from 3 times to cost of production to 4.5 times the cost of production, which is basically a near 50% jump if you look at it that way. The other thing that you're looking at is that country liquor, there has been a duty increase, but that's just 14%, not as much as foreign liquor. The third part is they've introduced a new section for Maharashtra-made liquor. This is basically grain-based foreign liquor, which is being produced in Maharashtra itself. So all the companies which produce in Maharashtra will now have to reapply for this category, and as a result of which they would stand to benefit. By how much will they benefit? The new revised minimum prices for country liquor, Maharashtra-made liquor, foreign liquor are all up for you on the screen. 80 rupees for country liquor, going all the way up to 360 rupees for a premium foreign brand. Maharashtra-made is about 150, whereas IMFL, the minimum price that it can be sold at for a 180 ml tipple is close to around 205 rupees. As a result of which, we've seen a gash on both United Spirits, Radico and Allied Blenders. Initial estimates suggest that 20 to 22% of United Spirits sales come in from Maharashtra. So the premium end definitely facing the heat. Radico Khaitan as well, 7 to 8% cut. Analysts expect this could be an EPS cut of 6 to 8% on United Spirits and about 2 to 3% on Radico Khaitan. But not all is lost because 3 stocks in particular are doing extremely well. Let's look at GM Breweries. That's higher in high teens, and that's largely because the street expects them to benefit because of the introduction of the Maharashtra-made liquor category and the lower rise that we've seen in country liquor. So these 2 factors doing well for GM Breweries. They will have to re-register brands with the state, but how long will that take? And by then, do the others go ahead and register as well or not is the big question. But until then, they stand to benefit. The second part, United Breweries, not falling as much. In fact, for a brief part, was also in the green. That's because no increase in duty on beer. And more importantly, the expectation is that those who are having premium spirits will now shift to premium beer. And that itself is what United Breweries' own strategy was as well, premiumization. So that should work for them. And the third thing that we're looking at is Sula. That's again a big gainer in today's trading session because wine is not mentioned in the excise duty increase. Secondly, Sula, Maharashtra is the largest producer of wine in the country. And thirdly, Sula as a stock before this had fallen about 40% from its highs. Last 4 quarters, not much had happened. So maybe what is spirits loss could perhaps be the gain for beer, country liquor and wine. All of them stand to benefit today.
Okay, all right, got that. Thanks very much for that, Manglam. Those are the key reasons why some of those stocks have been, under pressure today. That's important news that's coming in. Is India going to be making the Su-57? Well, from the looks of it, I think this is news that Parikshit is picking up, and we'll try and have him on in just a bit. So the request for proposal for the Advanced Medium Combat Aircraft program is to be issued next week. So we were supposed to move to the 5th gen of these aircraft, and the Su-57 is supposed to be one of the best-in-class stealth fighters with superior technology, the ability to go undetected, within radar systems, lesser heat signature, so on and so forth. So it seems that conversations are underway, and the government could be considering a collaboration with Russia. And let's see, the question is whether these fighters will be made in India or not. Let's pull up the HAL stock because, of course, Hindustan Aeronautics has been making the Su-30 fighters for many, many years. We've got, let's get HAL up and see if there's some excitement showing up on the stock. Not quite. But Parikshit's with us. Parikshit, this could be a big moment. So Su-57 soon?
Well, a final proposal is yet to be made and cleared by the government. Currently, we believe that there are multiple options being considered by the government in terms of plugging the gaps in our fighter jet fleet. The number one point that we're going to see some action on very soon is the Advanced Medium Combat Aircraft program. Recently, the government had modified the execution model, come up with a new model whereby foreign players, domestic players will be allowed to participate, and they will also be able to partner with the PSUs like HAL to bid for the AMCA program. Now, a request for a proposal, inviting proposals from the industry for this fighter jet program to make them in India is going to be issued later next week. And 15 days within that period, we will see the a pre-bid meeting also taking place where the industry will be called for a meeting. And within 45 days or so, bids may also be called for by the government. Having said that, the short-term measure that the government is considering, because having an AMCA program means almost 10-15 years of development, you also need to plug the gaps immediately. So the option is to also consider acquiring Su-57 fighter jets, 5th generation fighter jets from Russia, acquire them in a flyaway condition and also make them in India. Now, this is a proposal that the Russian government has given to the Air Force. It is under consideration. If approved, then the government will come up with a proposal and will start working on talks with the Russian government. Early stages, but it seems that the government would be keen on this, considering there is already an existing HAL line making Su-30 fighter jets. Then you also have the 5th generation fighter engine development program that is ongoing, and the government is considering proposals from both Safran, which is a French company, and Rolls-Royce for manufacturing 5th generation fighter engines in India. Now, these are the only two companies which have qualified as per the criteria to give 100% technology transfer and IP transfer as well. Now, as far as collaboration with the United States goes, no proposal right now for acquiring F-35s is under consideration. There is also a larger plan to improve our air defense systems. The S-400s performed very well for the government during Operation Sindoor. We've got 3 units of S-400, 2 more are likely to be delivered by next year, and the plan is to possibly consider acquiring at least 1 or 2 more units of the S-400 beyond the current timelines. And the Defense Acquisition Council could very soon also take up a proposal for acquiring quick reaction surface-to-air missiles for the Indian Army. This weapon platform could be acquired, and the acquisition could be worth at least 30,000 crore, and this would be a big boost for the domestic industry.
Oh, absolutely, Pariksha, that's very, very comprehensive. So you answered my second question. I was wondering what happens to the F-35. So what you're picking up is that there's no proposal to go to the Americans now to get them. So just to wrap this up in full context for our viewers, so what you're saying is that we could be looking at buying the Su-57s, some of them in fly-ready conditions, and eventually look at making them in India. And this would be in addition to the procurement of additional Rafale aircraft as well, is it?
Yes, just a few months back, and we had interviewed the Defense Secretary on this, Surbhi. The Defense Secretary had said that they have submitted a report to meet the gaps and the needs of the Air Force. The Air Force Chief has been speaking about how we need many more squadrons in the Air Force, and there is an aging fleet issue as well. So there was a plan in terms of near-term measures, medium-term measures, and long-term measures that were recommended. So what you see right now is a part of that larger exercise. The Rafale fighters, we already have Rafale fighters for the Air Force, and there is a supply chain, a domestic supply chain also, which is now coming up. The Rafale marine aircraft are also being acquired. And the reason why that has happened is because the Navy needed them, and there is already a Rafale base in the country. Now, we need 5th generation fighter jets fast. We can't wait for 10 years also. So what acquiring them from Russia can do is we can possibly get them in a shorter span of time. And eventually the plan would be to also make them in India. And Russia is willing to offer that technology, offer such a collaboration. And considering that you have a long history of collaboration with Russia on the Su-30, HAL has a line in Nasik. So there is a complementarity which you would like to leverage. For the long term, you would also need Atmanirbharta in engine manufacturing. So that's a separate program for the 5th generation fighter jet. We need those fighter engines. Safran and Rolls-Royce are willing to give you 100% technology transfer. So they are being considered. Now, as a long-term measure, India needs its own advanced medium combat aircraft program, or the 5th generation fighter jet program. Which is being developed indigenously. Till now, DRDO, HAL were working on it, but you need now foreign partners to come in, collaborate with Indian private firms, collaborate with PSUs, and then come up with a strong program, but it's got a long gestation period. So probably the Su-57 program will be a early harvest, so to say, or the near-term measures that the Indian government needs to take.
Absolutely, got that. Thank you for that, well-rounded, comprehensive take, Parikshit. Very, very important steps when it comes to India's fighter capability. And also the engines have been very, it's quite interesting because you know that those GE engines have been delayed pretty much forever. And without the engines, you can't have the jets. So if you want to make in India, I guess the eventual goal is to make the engines as well. And as Parikshit says, there's talk of technology transfer with Rolls-Royce now, among others.
Interesting developments. But for now, they're looking to plug the gap by now, and then make in India eventually over the next decade. Let's move on now and talk about Oil India. That's in focus. This is an Avendus note. Sudarshan joins in with the details. Sudarshan.
So today we are seeing an all-round gain in the oil and gas space, and also Oil India is higher, up more than 6% on the back of positive brokerage note that today Avendus Spark has initiated coverage on the stock with a buy call, and target has given is of rupees 630. That is an upside of more than 40% from current levels if you calculate. Now it says that over the next 3 years, it's predicting that company might see earnings growth of more than 80%, and that would be entirely led by increase in volumes aided by Numaligarh refinery, which might see an increase in the capacity over next 3 years. Also, Numaligarh refinery project is expected to be completed by 2025 end, and it will start contributing to earnings of the company, that is Oil India, by FY27. Some of the other catalysts that it has mentioned is, first, infra projects provide better visibility on production growth. Also, new well gas pricing could be an added positive. So as per Avendus Spark, the recent correction that we have seen in commodities can be a good entry point as far as Oil India is concerned.
Okay, that's on Oil India, but so also a word on OMCs. I mean, in a market which is overall dull, we've seen some green on OMC stocks. Anything specific here? So
all three oil marketing companies, IOC, BPCL and HPCL, are seeing buying in today's trade up in the range of 3 to 4%. Yesterday, there was US oil body, which is known as Energy Information Administration, has released short-term outlook that is for up to 2026, and it believes that in the short term, crude oil might move lower, and that can happen because of rising global oil inventories. Now, by the end of 2025, it expects that Brent crude might fall to $61, and by 2026, it might fall further and can settle around the levels of $59 to $60 per barrel. If you remember, last month, also in the month of May, the average Brent crude price was $64 per barrel, and if you compare against April, it was down $4. But in the last few sessions, we have seen a minor increase. But nevertheless, if you take a look at the short-term outlook, it's expecting a fall in the crude price.
Okay, all right, got that. Sudarshan, thanks very much for all the updates. We do have to take a quick break on that note. But, as we take the break, let's tell you about some programming developments as well. The good news for our viewers is that India's business news leader is just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. You can download the app from the Apple Store or from Google Play, or you can just scan the code on your screens.
What percentage of people you think die, Shireen, with regrets in their hearts?
A very large percentage.
So this risk of failure, fear of failure, is the one that makes people die with regret. And the only way to live is to live like an entrepreneur. Nature wants you to do that.
What would you consider today your highest conviction bet?
The abiding faith that India's time had come.
What is holding us back?
We prefer to be slow rather than fast. That's how we are a chalta hai country and not a daudta hai country.
The lack of speed would be, if you were to IPO India today, that would be on the risk factor side in the DRHP, right?
I wouldn't IPO.
You wouldn't IPO?
But to IPO, I must have a new story.
You have a special place in your heart for Charlie Munger and Warren Buffett. What have you taken from them that continues to guide and shape how you think today?
Understanding of balance sheet, because balance sheet is accumulation of good and bad.
What, to your mind, is your leadership language?
So the leader or a CEO has two roles, one of a mother, one of a captain. In the Infosys journey, not from public, but much earlier, right? Mr. Murthy was a mother.
How do you find India positioned in this mix today?
We have a resilience, we have a stability, we have a wisdom of our own. But वो हम एक scene दिखाते हैं, फिर we have a long break. Stop that.
Interval थोड़ा लंबा हो गया.
बहुत लंबा हो जाता है.
Welcome back. Well, the markets are holding with a mild gain. The broader markets, actually, you have the mid-cap indexes in the red, but still more number of stocks advancing than declining. So you take heart from that fact. Amish Balika is with us. Hi, Amrish. Good to see you in. Give us that one stock that you're tracking.
Nigel, the stock which I'm tracking and recommending today is Voltas, a leader in cooling and refrigeration products, a Tata Group company. In room ACs, they are the leaders with about 19% market share, have both the segments B2C and B2B. And Voltas Beko is an international JV which is expanding fast in the home appliances market. And they have done backward integration and got PLI benefits. And if you look at the projects business, there's a major turnaround in FY25 with a 169 crore profit as compared to a 328 crore loss in FY24. And they have a robust order book of about 6,500 crores. So a strong visibility, at least in the medium term. And overall, if you look at FY25, it saw the highest profits till date, nearly 3.5x of what they saw in FY24. And at least from a short-term angle, the weather forecast for North India is that the heat wave would extend a bit longer. So this is again a minor positive for all the air conditioning and refrigeration companies, at least in the short run. So if you're talking of FY27 EPS, I'm expecting about 38. And with that, my target price works out to about 1710.
Okay, so that's a view on Voltas. Amrish got that. Just talking about some of the, these Alcobev stocks, we've been discussing them quite a bit because of this Maharashtra duty hike impact. Right. Would you use the dip to buy, Amrish, or would you stay away?
I think I'll wait for a while because this just, I think, the beginning of a dip, especially when you're talking of the IMFL manufacturers. At the same time, I really don't know as to why the breweries and the wine manufacturing companies have shot up. I mean, it's possible that it's moved up as a since there was a relief, since it was not really taxed. And there's another school of thought which feels that there'll be consumer shift from IMFL to beer and wine, which I don't think is practically possible. I mean, a small quantity, yes, but not a major shift. If you look at the overall scenario, Maharashtra contributes about 12% of the IMFL sales all India. And if you look at specific companies like United Spirits, I think it's anywhere between about 20 to 24%. So United Spirits would be hit decently badly. So I still feel a further dip from here. I mean, I'll not be surprised if we see another possibly 10 to 12% fall in United Spirits. Maybe at those levels, if you're looking at a much longer term, could look at buying. Because whatever said and done, these taxes on cigarettes and liquor, it has an effect from short to medium term. And if you look at the longer term, things normalize. So from that point of view, at lower levels, I could buy United Spirits. But like I said, either 10 to 12% sort of a correction from here.
Amrish, what are we missing in VIP Limited today? We were just discussing earlier, Q4 numbers were muted. But the stock is up, and I believe there was a rating downgrade too. Yeah, so a negative assessment from a rating agency too. Stock is up 10% on large volumes. Have you heard anything?
I missed the...
VIP Limited.
No, I really don't track it very closely, so it's a bit difficult for me to really comment on this.
Got that. Oil India is another big mover, and Wockhardt. Wockhardt now locked in an upper circuit, 19% up.
I think after a decent amount of time, we have seen this sort of a move in Wockhardt. So I think it can sustain the momentum for a while longer. Possibly we could see another 12 to 15% sort of a move from here.
Okay. All right. So that's a take on some of these pharma stocks. Many of them actually. Newland Laboratories, Natco, Strides, Suven Life Sciences is a big move building up in pharma. And of course, Wockhardt is right at the forefront, 19% up on Wockhardt. Some more names. I mean, today is a listless day otherwise for the broader markets. Look at Lee Travenues Tech, that's Ixigo, up 7%. VIP is up about 10 to 11%. So the market's, moving through, trying to find new mid-cap leaders, I guess.
Well, that's right. Amrish, very quickly, if you have any view on Vedanta or Hindustan Zinc, it appears there's a bit of a pair trade going out there. Vedanta is virtually at the high point of the day. Hindustan Zinc is lower, but Hindustan Zinc actually has been the big mover, and liquidity is very, very less out there. But there's a big open risk build up on Hindustan Zinc. You're tracking any of these two?
In fact, I tracked both of them, and I have a buy call on both of them. And I think Hindustan Zinc clearly is moving up because of the silver component, because close to about 40% of the profits come from the silver business. And I think, the way the silver prices have gone up, I think that is contributing to Hindustan Zinc. Vedanta, I think clearly the play is on the demerger. I think that's much closer than what it was earlier. And that would be a wealth creator for the shareholders. So I think Vedanta can still move further from here. In fact, I had a price target of about 520 for Vedanta, pre-merger.
By the way, all the oil marketing companies are on fire today. BPCL has now moved up close to about 4.5%. Pull up HPCL, IOC. And Sudarshan was earlier telling us that the EIA, that's the Energy Information Administration, have released their crude outlook. And they're basically saying that crude prices are likely to fall. And that's the reason why oil marketing companies are higher. So they're saying the average Brent crude price in the month of May was $64 per barrel. By the end of 2025, it's expected to fall to $61 per barrel, according to EIA. And in 2026, that's next year, it's seen further moderation expected to $59 per barrel. So look at that, BPCL 4.5% up.
Yeah, big moves on some of those oil marketing stocks for sure. On mid caps, today was one of the days where there was a lot of profit taking. So let me talk about some of the ones that have lost ground. Alcobevs, we've been seeing that throughout. United Spirits about 6.5% lower. Allied Blenders, and of course Radico Khaitan also ending with a cut of almost 3.5%. ICX was the other casualty of the day, down about 8% as the talks of market coupling have resurfaced. A couple of financial names weak. I mean, this is beyond lending financials. ICICI Lombard, Aditya Birla Sun Life, AMC on the weaker side, and BSE, of course, let's not forget BSE. Was down quite a bit as there's concern about those F&O volumes, whether they're drying up. So that's where a lot of the profit taking was. Even defense names, Garden Reach, Shipbuilders, for instance, losing about 3.5%. So that's where the weakness was. But then, like we've been pointing out, pharma really stood out. Big pharma rally in the mid and small caps today. So Wockhardt, Newland Laboratories, Natco Pharma, Suven Life Sciences. Many of these stocks up between 10 to 20%. Big moves in some of these names.
Just rounding up the large cap action then. IT on the front foot. HCL Tech top gainer, 3% up. Infi, Wipro, Tech Mahindra up close to about 2%. Reliance Industries, that heavyweight, did well, closing at 1450. ICICI Bank, after 2 days of losses, rebounded today. And a couple of these two-wheelers, Bajaj Auto and Hero MotoCorp, riding in top gear. 1% up, so outperformance seen by some of these two-wheelers. On the way down, Shriram Finance came in for profit booking, and weakness seen in Power Grid, BEL, Adani Enterprises, Tata Consumer. Well, that brings us to a close on this edition of Closing Bell. Don't go anywhere. On the other side is Markets Forward.